First of all, thank you all for joining today. My colleague AJ and I are excited to be presenting to all of you today. Just a real quick introduction and we'll kind of jump right in. So my name is Tina Mistry for those who are maybe new to Portfolio Advisors, but I'm CEO and Senior Financial Advisor here at PA. My colleague AJ Flores is a lead advisor here at PA as well. And we are excited to bring to you basically a first of a series of webinars we're going to be doing over the course of the next 12 months or so. So we thought we'd kind of kick things off with something educational about excuse me, what people need to know when they're seeking financial advice. So we're going to get started. I'm going to flip through our disclosure slides. So give me just 1 second, make sure my technology is working. And great. So while you guys are reading the disclosures, of course, we're a highly regulated industry, so no presentation is complete without some legal disclosures there. And I know we have a couple attorneys on the webinar as well, so that's for you guys. I'll give you guys a minute to read that, but just a couple housekeeping things for our webinar today. We have everyone on mute just to make sure we can get the recording. We are going to be recording here. I'm going to actually flip through our next slide here. We are recording today, so your consent is being a part of the recording, or being a part of the webinar is your consent for today's recording. You're welcome. We want to make this as interactive, as informative as possible. So our colleague Andrew Bunavong, who's our marketing director, is going to be monitoring the chat box here. So feel free to toss in questions and that sort of thing, and we'll try to insert those questions as we kind of go through the various slides. Again, everyone's going to be on mute. You'll remain muted for the entire presentation. You're welcome to sit back, relax. You can turn off your cameras, turn on your cameras, whatever you feel most comfortable with. So again, we want to make this as educational and as informative as possible, and hopefully everyone goes away with some takeaways from today that they can share with their friends, loved ones, so hopefully some really helpful information today. Great. And I think we're going to have others join us along the way, so we'll just kind of keep an eye on that as well. All right. So I'm going to jump right in. The topic of our webinar today is a little bit untraditional. And I think one of the, or several of the forms of inspiration for the webinar today are kind of highlighted on this slide. Being in financial services, AJ and I being advisors for 10 years plus, we talk to a lot of different people, whether they're clients, prospective clients, people out in the public. And more often than not, we hear a lot about people getting scammed. The slide obviously says, our industry has a bad rap. And I think one of our core values here at Portfolio Advisors is to empower people through education. So we really felt passionately about putting a webinar like this together. So hopefully can obviously educate and inform, but also help make the process of seeking financial advice less intimidating, educate the consumer, and equip them with the right questions and information to ask, and really what to look for. And, really right next to somebody's personal health, managing your finances is kind of at the top of the list. Obviously, taking care of ourselves from a health standpoint is super important, but making sure our money is taken care of, and making sure that we're managing our finances in a way to provide for ourselves is really obviously a very important piece of life as well. So that was sort of the inspiration behind this webinar. And then just to give you a little bit of a roadmap of what we're going to talk about today, we are going to talk about what to do before someone might seek financial advice. So what to do even before they step into an advisor's office or on a virtual call. The second thing we're going to talk about is what to consider when seeking financial advice. And last but certainly not least, red flags to look out for. We think it's really important for consumers to go into this process eyes wide open. So we really want to give them some things to look out for and maybe deter them from working with certain financial professionals. So I think with that said, AJ, I'm going to let you take it away.
All right. Perfect. So, again, thank you all for being here. So, Tina has introduced me. I'm AJ. I am one of the associates here, a lead advisor here at Portfolio Advisors. So, uh, in approaching seeking financial advice, obviously there is a lot of, there's a lot of vulnerability and sensitivity with the information, not just from a security perspective, but also from a personal one. So it is a big step seeking financial advice and trusting your financial information with a stranger, even one that is a professional. So there are some things to think about in approaching finding financial advisors. So typically, when the decision comes to seek out professional advice, there is a particular pain point, something that having the expertise of a professional would, you know, provide some significant benefit. So whether that is, I just started a career and have no idea how to untangle the brochure of employment benefits that my employer is offering, or I've come into a sudden windfall and have no idea how to manage these finances responsibly. That's absolutely a couple of trigger points that could occur. So having a good idea of um, what issues are a priority to tackle, that's absolutely helpful for any financial professional to help begin the process of servicing your needs. Additionally, having your fingertips on all the information isn't the most important thing. You don't need a full comprehensive list of all, to the cent, every inflow and outflow coming in and out of your bank account. But having a good idea of at least where to find this information, and in broad strokes, being able to provide some of that information. So things like your pay stubs, having a good idea of your fixed expenses. So if you're approaching a financial professional needing advice on budgeting or cash flow management, knowing where the money is going, in large part is going to help. So things like fixed auto expenses, um, membership subscriptions, mortgage payments, things of that sort. Those types of information having organized in preparation for meeting with a financial professional for the first time is just going to help make those conversations more meaningful. Okay. Tina, you can. All right. So one question we often get, uh, there are a lot of misconceptions around what a financial advisor even does. I think the most common thing that comes to mind when people think of a financial advisor is, what am I invested in? What should I invest in? What company do you like? Where should I put my dollars? And I mean, that's obviously a very important, significant part of any financial plan, but it is just one aspect of an overall plan that a financial professional can assist with. So as you can see on the screen, there are many different items, different topics that may pertain to you. Some, in different stages of life, different financial issues will arise, based on your stage in your career, as you approach retirement, whether you have a family that you're planning for. There are different items that a financial professional can assist with. Planning is it's a broad field. So it can include, as it says here on the screen, investments, um, minimizing and maximizing your cash flows, making sure you're not paying more taxes than you need to, and handling financial transactions in as tax effective a manner as possible. Additionally, there is the person-to-person element, so that can come in various forms. You may require someone to act as an accountability partner, maybe somebody who acts as a coach to help fill in the gaps of knowledge. At times, we don't know what we don't know, and having somebody who, uh, lives and breathes this material on a day-to-day basis can help provide that foundation for, what things should I be looking out for? What pitfalls should I be avoiding? Um, Further, having an ongoing relationship with an advisor helps in the sense that they have that structured knowledge of what constitutes your life and your values. If you're meeting with, for example, a medical professional who has an understanding of your medical history, they can make suggestions or recommendations or write prescriptions based on what they know about you and have learned about you through your various meetings. And the same thing holds true for somebody in the financial space. So uh, having that sort of relationship with somebody who knows you, your values, your family makeup, and where you eventually want to go, will all help towards making that conversation more meaningful. So, what sort of services specifically then does a financial service professional provide? For professionals providing comprehensive services, uh, the planning topics are, again, it's broad. It really will vary based on your stage of life. So things like retirement planning, estate planning for how your assets should be handled, in your life and beyond. Managing risk, the having adequate insurance coverage. You can see, of course, cash flow, debt, and budget management. Assistance to loved ones, that is goes hand in hand with things like college planning, helping plan for aging parents, planning for maximizing children's custodial or early IRA accounts, uh, transferring assets in a tax effective manner that goes alongside income tax and estate planning. So uh, these things again may not all apply to you at once, but as you transition through life's various stages, it's very common for some of these to suddenly become the forefront topic that you need assistance with. And who better to work with than an advisor who has gotten to know you and has helped guide you through each of those different life transitions. The last item here, concierge services, that's a common role played by a financial advisor who will coordinate with your tax professional, your CPA. They'll talk through assets and liabilities with attorneys to ensure that your estate plan captures all of the important aspects of your life to make sure that they're handled in an appropriate manner and transition to the next generation in a tax effective means. So all of these things, again, are services you can find with a financial professional as you transition through life's various stages.
Thanks, AJ.
Yeah.
So the next topic here we wanted to talk about was what to consider when seeking financial advice. So, imagine yourself maybe having that first meeting with a financial professional. What are some of the things that you're looking out for to lend to credibility, experience, asking the right questions about compensation and fees and things like that. So we're going to kind of dig into some of that here. So credentials and experience. So certifications and licensing are really important in our industry. Looking for folks who are certified financial planners, chartered financial consultants, or chartered financial analysts. Those are some pretty significant credentials in our industry. AJ and I are, just to use ourselves as an example, we're both certified financial planner practitioners, or CFP for short. That is pretty darn close to the equivalent of the CPA licenses for accountants and pretty darn close to the bar exam for attorneys. I will hand it to the attorneys in the crowd that that is far more difficult, but very comparable in terms of an industry standard to look for. There's some other licenses that I'll talk about here in just a moment, but when you're seeing that a financial professional has gone through these sort of educational programs, those programs come with quite some rigor. The Certified Financial Planning designation is at minimum a year program. can take longer. You have to pass every single portion of the educational program, which covers the variety of topics that AJ just sort of spoke on. And then in addition to a comprehensive exam. The other two certifications that I've listed there are pretty similar as well. Actually, the CFA is even more so intense and has a couple different board exams to pass. So, you know, looking at these certifications as sort of a standard of the financial professional that you're working with is really important. It really shows you that they've gone through the process of educating themselves and continue to educate themselves on the various financial topics that serve their clients well. So, industry experience, again, important to know, you know, someone who's kind of been in the industry for several years. There are disclosures, which I'll talk about a little bit later, that actually are given to prospective clients to demonstrate the amount of years of a professional in the industry. So looking for the amount of years, looking for professional backgrounds, things like that are super important. And in certain cases, there are advisors out there, financial professionals that have a specialty of some kind, maybe work with a specific profession, a specific demographic, so on and so forth. So, you know, people who work with pre-retirees, retirees, maybe physicians, healthcare professionals, executives, so on and so forth. The list goes on and on. So really looking for someone, going back to AJ's point, looking for someone that has experience in specific topics that are pertinent to you and your goals and what you're looking for is a great way to kind of filter through different professionals. This particular
Tina,
slide, yes,
hold on.
yeah,
We have a question here.
yeah,
What about a
absolutely.
CDFA, Certified Divorce Financial Analyst
Yeah,
by
yeah,
Mr.
thanks.
Dennis Keithley?
Yeah, thanks for the question, Dennis. That's a great added certification. CDFA is a great one. I know other advisors in the area, really across the country, that have that certification. The CDFA is specific to those who advisors who focus with divorced or about to be divorced clients. So absolutely. I know that one is, I want to say, several months of an educational program as well. So again, looking for those professionals, you know, if you were about to become divorced or in the middle of a divorce and looking for an advisor that might know a lot about the ins and outs of that, absolutely. Looking for someone with the CDFA is a great idea.
Yeah, Tina, if I could add to that. So
Absolutely.
I think one of the other benefits of working with an advisor is there is something of a professional community, a network that is built out through not just public organizations that advisors are a part of, but through their experience working with tax professionals and attorneys. And so, let's say in a case where a specific financial professional you're working with doesn't necessarily have the level of expertise that maybe is necessary or prudent to have, they would definitely know where to refer out to. So for somebody who, maybe is going through a bit more of a specialized issue like a divorce, settlement, you want to make sure you understand the impacts of that, not just from a tax perspective or a retirement planning perspective, but it's a obviously a very taxing emotional time in someone's life, and having somebody to help think through things objectively is absolutely valuable. So there are many different certifications, far too many for us to cover in one day, 1 hour here. But there are things like financial professionals dedicated to exit planning for business owners, succession planning, things of that nature. So yeah, do the research, figure out what the best fit for a professional and expertise applies to your situation, and seek that out, or ask for referrals from professionals that you've worked with in the past.
Great. Background checks, just like employers do background checks on employees, background checks are important for financial advisors, if not more so. So a couple of the sites that we've provided here are great ways to check personal backgrounds, check against any lawsuits against advisors, those types of things. So we've talked extensively about this certified financial planner designation. So, if you were to click this website and basically try to find out if AJ and I were CFP professionals, you'd be able to click that website and type in our name and find us. So great way to ensure that you're working with a CFP and or any other type of certified professional. This FINRA broker check is another one that I wanted to highlight. Various advisors have different types of series licensing, which I'll get into in just a moment. This is a great way to check against if they're appropriately licensed, where they're registered, employment history, and disciplinary backgrounds or disciplinary actions against them. So again, I've talked to various prospective clients, existing clients who are maybe working with someone that not necessarily on the up and up. So I think again, doing these background checks are really helpful. We are at Portfolio Advisors, we are registered with the SEC. We're federally registered as a firm. So that's another great site to go to as well. And then in some cases, certain advisors may only be state registered. So it's important to know if the advisor that you're working with is state or federally registered. And then you can go to the appropriate website to double check their status. So, and let me click over the next slide. So I alluded to some additional licensing called series licensing. So 67, 63, 65, 66, and 24. So I won't bore you with the details of these various licenses, but I'll use them in various examples. So as a registered investment advisor, or an RIA for short, AJ and I both have the Series 65 license. So this is a license that you obtain federally. There's an exam that has to be taken, and then that allows us to legally provide advice to the folks that we work with. There are different types of licenses for different types of structures for an advisory firm. So if you're familiar with LPL, Morgan Stanley, some of the maybe larger firms in the country, a lot of those folks who work at broker dealers are going to have things like the Series 6 and the Series 7. So just some things to look out for. And then you'll see in some cases a couple of these series licenses are a combination of a couple and so on and so forth. So you'll see on the right here the importance and significance of each of those series licenses as well. So this is extremely important to look out for and know the series licenses because, in our case, the 65 legally allows us to provide advice. So, in this sort of day and age and the onset of, what we call finfluencers, so people on social media platforms providing advice and whatnot, to much of our dismay, a lot of these folks are probably not licensed and they're providing financial advice. So again, really be careful on who you're seeking advice from and making sure they have the appropriate licenses to be able to do that.
Absolutely. And Tina, something I would add, if you're interviewing different advisory firms, different advisory professionals to, come to a decision about who to work with, ask about their designations, ask about what licenses they hold, what that entails for a service offering, and if they will be more than happy to answer what all of their years of study have amounted to. Great.
And then the other topic here of when you're seeking advice is knowing what the advisor is being compensated and different types of fee structures. So this is a little bit of an unknown or a little bit of an elusive topic in our industry. So we definitely wanted to talk about it here today. So commissions are a common way that advisors are compensated. They're typically selling an investment product of some kind. And they could be incentivized to sell those products instead of certain other types of products that might be in the benefit of their clients. So it's important to know if the advisor is being compensated via commissions or via fees. So here at Portfolio Advisors, we're a fee-only firm. There are various types of fee-only firms that are available to consumers. So one of those is an hourly fee. So we know advisors across the country that only charge an hourly fee for their services. And in some cases, it's a great fit for people who maybe have a specific question, maybe needs short-term assistance of some kind, and don't necessarily need that ongoing relationship. So hourly services are available through various advisors in a lot of different ways. Percentage of assets under management. So this is kind of where we fall as an example, but advisors can charge a percentage of the assets under management that they manage for a specific client. So just using a quick example, if a client has a $500,000 portfolio that's invested in across various types of accounts, an advisor can charge a percentage of those assets on a quarterly basis, and that is how the advisor is compensated. So we're obviously going to be a little bit biased here in terms of this particular structure because it's how we're structured. But I think one thing to underline too is that particular fee only structure, whether it's hourly or percentage, or I'm sorry, whether it's a percentage or even fee based, is that it really does encourage advisors to maintain a long-term relationship with the clients that they serve. So it's important to understand that those fees aren't excessive. So just wanted to highlight that. And then fee-based is a common terminology in our industry as well. So fee-based means it could be a combination of commissions and an ongoing fee of some kind. So understanding that terminology when going into a particular office or into a particular meeting with an advisor is important to know. And AJ, I'll hand it over to you.
Okay. So we've talked a little bit about preparing to meet with an advisor, what things to be on the lookout for, some common questions to ask when you engage with a prospective advisor. So up next, we're going to talk about some things to be on the lookout for, to have your radar up for. So first off, we're going to be talking about conflicts of interest. We'll also be talking about certain red flags to pay attention to. So, as Tina alluded to, it is important to understand that conflicts of interest exist. So, conflicts of interest are essentially when the interests of the client, yourselves, or the interests of the financial professional come into conflict. So, the example of commission based, just as an example, if an advisor is financially compensated by a particular investment house, just as to take one example, and they are then incentivized to promote certain mutual funds or certain types of investments. Because of that, there then exists a conflict of interest, wherein the advisor may try to sell an investor on a particular product that maybe isn't the absolute best case scenario or in the best interests of the investor. So one thing that is important to understand is conflicts of interest do exist, and you are well within your rights to ask any prospective advisor, what conflicts of interest do you deal with or do you face? Are you financially compensated by any third parties not related to either your employer or myself, the investor? So as the slide here outlines, conflicts of interest can be commission based, they can be based on incentivized product sales, and they can be, in some cases, even based on who they refer out to. So all important things to be aware of in deciding whether or not to work with an advisor. It is absolutely within your right to ask what conflicts of interest they may hold. One important thing to talk about is the fiduciary standard. So for Some of you here who are in the field of law, you will be well familiar with the idea of a fiduciary. But for the rest of you, a fiduciary is somebody who is legally obligated to hold the best interests of their clients above all else, above their own. It does not mean that somebody held to a fiduciary standard has no conflicts of interest. It just means that their interests must take backseat to the clients, to yours. So one thing to think about if you're looking for a prospective advisor or vetting different advisors, ask them if they're a fiduciary. Ask them what standards they're held to. One standard that the fiduciary standard is often compared with is the suitability standard. So as you saw on the slide before, a suitability standard, it simply holds the financial professional to recommend products or investments that are suitable given the nature of an investor's or a client's particular circumstances, but it may not necessarily be what is the most prudent. So uh, in a case where a conflict of interest exists, the professional held to the suitability standard can satisfy that standard by recommending something within a tolerance range, if there's a specific risk tolerance that an investor has based on their discussions, based on their goals, the stage in their career. Uh, but that particular product might come with higher expenses, or it might come with some sort of financial incentive for the professional to recommend it. In this case, the suitability standard is met, but it is not necessarily in the best interest of the client. So ask what standards your financial professionals are held to, and just make sure that you know the difference and that you're aware of it, and it's factored into your decisions for who to work with. As for red flags to watch out for, so as Tina alluded to earlier in the presentation, uh, there can be different barrier or different bars, different standards that people are held to in this field. And unfortunately, there isn't, although there has been some push by professionals in our space in recent years, there isn't always a whole lot of regulation or the highest levels of regulation for who is allowed to call themselves a financial advisor. Tina referenced content creators and influencers, and just because someone may have a significant following on social media or Instagram or TikTok or whatever it is, it doesn't necessarily mean that they uh, are going to operate at a fiduciary or suitability standard or should be giving financial advice online through these platforms. It's absolutely a red flag there. If a couple of these items, high pressure sales tactics, at the end of the day, you are seeking advice, and there is, of course, the risk of of potentially being sold something that's not in your best interest. So be aware that just because you're seeking help doesn't mean you have to settle for the first person that is trying to sell you on a great deal. There are also a lot of regulations in our field around guarantees. Uh, we we understand that in any investment with any investment product and just by nature of being in the markets, gar guarantees of returns are that's probably the biggest no-no for us in our field. If anybody is guaranteeing a return and eliminating all risk associated with it, it's probably too good to be true. All that glitters isn't gold. If somebody is offering you something and it just doesn't seem, or it just seems too good to be true, it probably is. So as it says here, guarantees of returns are an illegal practice in our profession. So if anyone is guaranteeing you a return, uh, that should already have your guard up. That said, it's important to note that all investments do carry some level of return, some level of risk. The nature of that risk is going to vary based on what the investments are. We won't go into all of that here today, but it is par for the course for investors to have an acceptable or tolerable amount of risk to take on. And that may be a discussion you have with a financial professional because you may not even be aware of what your risk tolerance is before going into a meeting. So Definitely something to talk about. Uh, Talking through the different fee structures, if if a financial professional who is offering services is kind of cagey around what their fee structure is, maybe not very forthcoming about how they're compensated or how they're paid, that in and of itself is a red flag. More than anything, trust is a valuable commodity in our space, and if a financial service professional is not upfront and forthcoming about the structure of their fees, that's not exactly starting a relationship in a very trusting place. So absolutely ask about the level or the structure of fees, the different forms of compensation that service professionals receive, and make sure you're educated on that front. Finally, here, disclosures. Financial professionals are highly regulated and, as such, are required by law to have certain disclosures available to clients or prospective clients for that matter. So, as Tina noted earlier, you can look through the different regulatory agencies, find different financial professionals, especially the ones that you're talking to and vetting for services, and see whether they are actually licensed, actually hold the designations that they say they do, and see whether any legal or disciplinary action has been taken against these professionals. Uh, I'm not going to say that you should automatically rule somebody out because they have had legal action. I'm just saying that you should be aware of it, and they should also be forthcoming about those sorts of things. Any financial services firm that you work with will generally have annual filing requirements to update the status of their licensing, their team, and any disciplinary actions taken against their associates or their firm. The bottom line here is that the fiduciary standard is the strictest standard that financial service professionals are held to. And if you are looking for a financial service advisor, a financial advisor, a planner, whatever it is, uh, maybe look for somebody who's a fiduciary. That'll ensure that the person that you are speaking with, the prospective advisor you are considering using, is someone who is going to hold your best interests ahead of their own.
Great, thanks, AJ. We'll probably present for a few more minutes, and then we'll definitely take some questions from the audience. We wanted to maybe provide some additional resources during our webinar today. And as I mentioned, our webinar is being recorded. After it is subject to compliance review, we do hope to email a copy of the recording along with the slides, so you have these resources available to you. So one of the resources we wanted to provide were helpful questions to ask when interviewing a prospective financial advisor. So I won't go through all of the questions individually because we have alluded to several of them via the presentation, but I'll just maybe highlight just a few questions that are maybe some of my favorite questions to receive when someone is considering our services. Obviously, anything around credentials, we like to actually talk about the educational process that we go through with the CFP exam and so on and so forth. Obviously, the services, how often do you meet with clients? What does communication look like? I think one of our core values here is communication, proactive communication with the folks that we serve. So, how often are we meeting with clients? How often can they expect to hear from us about various recommendations, updating their financial plans, so on and so forth? We definitely like to talk about that. And then, who do they typically serve? Do they have experience with folks like yourself? Those are great questions to ask. Fees and compensation, I think we discussed that in pretty great detail, so I'll skip that one. Investment philosophy is a good question to ask and often one that we get. You want to make sure that however your funds are invested, you have some understanding of how it's being invested and the approach in which that they're taking. Are they trying to beat the market? Is the advisor taking more of a passive index approach? Is it a combination? Are they using cryptocurrency? Are they using alternatives? What types of things are they using or not using that you may or may not feel comfortable with? AJ discussed the fiduciary responsibility in a lot of detail there, so I'll move over to the next slide here. Performance and track record. So we often get the question from prospective clients about can we speak to some of your references, or do you have any testimonials from current clients? This is sort of a new avenue in which independent advisors can actually have testimonials from current clients. Some new regulations were created around that, so we're happy to provide those references or testimonials. Technology and tools, is the advisor that you're potentially working with living in the dark ages and doing everything paper and pencil, or do they have an online portal that can help securely transfer documents? Really important, in this day and age of cybersecurity, making sure your personal information is protected. One of the other questions I really personally like getting from clients is the succession plan question. So being an owner of a firm, what if something happens to me? What's the game plan? How do we make sure clients are being taken care of? Advisors or firm owners may have answers to those questions as well. And then one of the additional resources we have on these slides is a list of documents to potentially bring to your first meeting. So AJ spoke about this earlier about kind of knowing, income, assets, liabilities, so on and so forth. So this can be a great way to organize some of that information. Again, you don't have to have it all figured out. That's why you're seeking out professional advice from a financial planner or financial advisor. But continuing to gather these types of things as you're moving forward in the process of working with an advisor or upon having that first meeting. This is the type of information that they're going to ask you for in terms of being able to put together a well thought out financial plan for you. So estate planning documents are important. Obviously we talked at the beginning about having a sense of your goals, what you're looking for, and then really anything else under the sun. If you own a business, how many employees do you have? Do you have a retirement plan for that business? Do you own property? Things like that. Anything pertinent to your financial picture is helpful in terms of a list of things to provide a financial provider. So in conclusion,
Tina, we have
yeah,
another question. Sorry.
absolutely. No, thank you. No,
Yeah. Dennis, what financial software do you use? How do you look or consider longevity planning?
great question. So we use, I'm gonna try not to nerd out here, but we use a financial planning software called Money Guide Pro. They're one of the largest tech providers in our industry. There are a couple other ones. eMoney is another one, and I think Navaplan is still out there. But our financial planning software, all of the items that I just listed in terms of the various things that a prospective client would provide us, we input all that into this planning software, and then we input their goals, and then it generates a probability of success of being able to achieve their goals. So it has various spreadsheets and different visuals and features that allow us to track over time the sustainability of their portfolio. So are they spending too much? Are they spending too little? Are they able to achieve their goals? So on and so forth. So we've got some pretty sophisticated software for things like that. And then the software actually is also it's cloud-based. So we can give clients access to that software as well, which is nice because I often kind of joke around with prospective clients that they're sitting at home one evening over a glass of wine. They can chat about their financial goals and things that they want to do, or see how on track they are, and that's all available to them. So yeah, I appreciate the question. I don't think we have any more. Correct, Andrew?
No, no, no. If there
Okay,
is more,
great. Please keep them coming.
I'll I'll let you know.
So yeah, just to kind of sum up before we jump into some questions here, I think the comment we often get from prospects who come in the door is that it's managing finances is time consuming. Busy, we know various busy professionals who have young families. I'm in that same boat. It's a full-time job managing someone's finances. It can be intimidating. It can feel embarrassing. To AJ's point, vulnerable. It's almost like going into a doctor's office and them doing, a head to toe exam, and you're meeting this person for the first time. So I think we just want to make sure that, again, going back to the why, going back to the inspiration for this webinar, that people are educated on how to appropriately seek advice, and looking out for those red flags, and making sure they're choosing a financial professional that's well suited to take care of them. So I see, let's see here. So before I answer some questions, I just want to make sure that you all have our contact information, our website. If you have any questions, want to learn more, thank you to Andrew, who's our marketing director. We are active on social media. So happy to engage in any way. With that, we've got about 11 minutes left before the top of the hour. I think we've got some more questions coming in, so please keep them coming. I see, let's see, Dennis asked, how do you look at housing wealth and mortgages in your planning? AJ, would you like to jump in on that one?
So, obviously, housing and real estate is one of the more significant assets that a person can acquire and accumulate over the course of their lives. So, understanding the sort of equity and how that builds into a person's financial balance sheet is very important. Now, if we're talking about planning as far as a source of income, I'm aware that tools exist. Dennis, I have, knowing you, I know that there is the tool utilizing something like a reverse mortgage to promote the longevity of an investment portfolio, and timing the access of home equity alongside other sources of income like investments or fixed income, based on different market conditions, can go a long way towards promoting the longevity of a portfolio. And I think that's something that we often consider. So it's definitely factored in. It's definitely a part of it. And as we build out a client's profile through software like Money Guide Pro, we essentially produce a person's cash flow statement, their balance sheet, and the equity in real estate and mortgage liabilities. Those are all present on that software.
Yeah, I was just going to add too that it's not a one size fits all recommendation, whether it's with housing and mortgages or investment portfolios and things like that. I think when we're often talking to folks about mortgages or real estate, looking at it in the context of the bigger picture, looking at, for example, if someone wants to take out some money out of their portfolio and that's going to create a large tax consequence, can they look at a home equity line or something like that to draw from to minimize those tax impacts? In some clients' cases, it'll be a favorable situation. In some clients' cases, maybe they don't qualify for a home equity line or something like that. So yeah, really kind of putting the puzzle pieces together is really important in the aspect of working with an advisor. So yeah. Let's see here. We're happy to take some more
Stick
questions.
around for a few more minutes. If anyone else has any other questions, feel free to add them here in the chat box.
While our audience is thinking of more questions, which we hope so, I wanted to just sort of share at the beginning, I mentioned that we will be hosting a series of webinars headed into the new year, and this is kind of kicking us off in terms of that series. Our next webinar is going to be on Tuesday, January 28th at noon. We're going to try doing noon webinars and then maybe mix them up just depending on what works for the audience. But the next webinar, we're going to jump right on in and do a deep dive in terms of Social Security. So AJ here in the office is our glorified Social Security expert. So AJ has done an extensive amount of work with clients when it comes to Social Security itself, doing various types of analyses, and has learned far more about the topic. He's going to be talking about Social Security demystified, 5 Social Security myths dispelled. I think it'll be extremely educational. So it's a hot topic right now, you know, the sustainability of Social Security, those types of things. So we're happy to be doing that. And then I forgot to put the extra bullet point, but and we'll be sending out emails and whatnot about this, but on Tuesday, March 25th, most likely at noon, we might play around with the time a little bit. We're going to be doing tax tips with myself, Tina, tax tips with Tina. So I am the glorified tax nerd in the office. So taxes, talking about taxes, how to save clients money when it comes to taxes is something I extremely enjoy talking about. So we're going to be doing a webinar on that headed into the new year. So
Absolutely. And while we're sticking around here for any additional questions, I also want to note there is going to be a prompt for any feedback for our webinar here today. So if there's any feedback you'd like to provide, there will be an avenue to do so. Additionally, I would welcome if there are any suggestions for topics that you would like us to cover in future webinars, or if there is a specific topic that you maybe want to go offline about, like Tina said, you're welcome to reach out to us directly. If there's something we can do to help, we're happy to, or if there's maybe even a more specialized professional that we can refer you to, that we're happy to do that too. So please do provide your feedback as well as any suggestions for ideas you would like us to cover during upcoming webinars.
great.
Okay.
Well, AJ and I will stick around here for just a few more minutes for any last minute questions or anything like that. But thank you all so much for participating in our webinar today. We see a lot of friendly faces and familiar names, so we definitely appreciate the support and the participation. And we hope to connect with you soon in the future. Thank you all.
All right. Thank you very much, everyone. I think we'll wrap it up there. Thanks for joining us. And for those of you still sticking around, have a great rest of your day.